friends, good week. How are you? Vladimir here with you, and this is the weekly review for 19th of March 2012. Well, the last week was interesting and zigzagging a little bit, I would say, which caused dodges on most of the pairs, as you can see, mainly just dodges or a little bit hammers, as you can see here on the chart, on the weekly chart. The week started with a bearish trend and finished all bullish. The question is, what does it mean? Does it mean that the dollar finished its strength or not? Well, many things will be depend on from Europe once again. As Greece is okay, looks like issue solved as for now, but now the speculations are talking about Spain and Italy, and who knows, maybe even Ireland, right? It could have not good effect on the market. From the other side, as long as everything continues to be good, why not to continue higher? New Zealandian and Australian both stopped around the 200 moving average and retraced up. But the question is, do they have enough power, enough momentum to go even higher? As for now, I'm a little skeptical. I will explain why. Let's start with the Australian dollar. It just broke through. On the first time, it broke a false break, right, below the 106.20 area. Then, on the second time, it broke. And this time it worked, right? Made a break. On the second time, it went all the way down for the duplication we were talking about for several weeks, right? This duplication area. We discussed about it on the previous weekly reviews. Now, the question is, will this resistance, it's a range, it's somewhere in between 106 to 106.30 or 40 even. The question is that about to hold, and then the Australian dollar will go lower? Or are we about to have a new uptrend from here? If a daily chart will close above this area again, above this resistance, stiff resistance, then mostly, I mean close and hold, right? Not close and bam, all the way down back again, but close and hold. It will make no doubt that we are going all the way up the previous resistance, 108, and then probably all the way back to around 109.50, 110. But if this pair does not hold on the very first days of the week, and the 4-hour charts, the intraday charts, will create some divergence here around this area, it could be considered as very nice sell opportunity. On 1-hour chart, you can determine this sell. If it does play around, right, and create here this divergence, or who knows, maybe a regular divergence with the moving average as well, maybe then we will get the new downtrend. And if that begins, this downtrend can take us to the 200 moving average again, or if it breaks it, right, we will go all the way lower for another duplication, means to around 102. Very interesting days we are about to have on the very beginning. We have two clear scenarios to watch for, one bullish, one bearish, and to enjoy from the moves. Now, pay attention for the daily chart. The MACD is still bearish, right? RSI still holds below 50, which means still bearish momentum. Just a stochastic crossing up. That's why we have this confusion from the intraday charts. That's why the first days will be critical. Same with the New Zealandian. Take a look here. Same story. This duplication of the sideways move, as we discussed about, all the way down for the trend line, as we discussed about, right? Hold on the 200 moving average, RSI holding 50, MACD is still bearish, and guess what? Intraday charts could make the stop on their resistance. As you can see, they did it already before, right? And 1-hour chart could go and create this divergence. divergence, complete this divergence, and start the down move, right? Based to weekly chart, we have a bullish hammer, but RSI still am bearish, stochastic still am bearish, and MACD slope still bearish, despite of this bullish hammer. What does it mean? It's very, very, very confusing situation. That's why I say the first days will be critical, and stay tuned for that. Because if the prices will retrace down, we might go not just to 081, but we might go all the way to 079 or even lower. All the way, so the daily chart could begin to create a bullish divergence on the later steps. Stay tuned for the Pacifics. What about the euro and the pound? Pound is still on this range. Sorry about this line, it's not the line I'm looking for. Around 159 all the way to the 156.40. This range is being playing around. As you can see now, it's retesting the 200 moving average again. The pound, as not as the Pacifics, already making the break above 50, but during a range it will break many times the 50 as it did before, as you can see. So it's not so reliable signal anymore, right? Let's take a look on the weekly chart. Weekly chart also, it's on the 20 moving average of the Bollinger Band, which means it's natural price for the pound dollar. On the 4-hour chart, still nothing. Just a more boost on the correction means we could go higher. Remember, 159 is a very stiff area, a resistance. On 1-hour chart, we still could go higher to create a divergence. The simplest recommendation I could get is stay out of the pound dollar. But if the pound dollar will again close about the 159, or even to be more safety, more conservative, close about 160, then pound dollar should gain bullish momentum. Then it could go much higher. With the euro dollar, pretty much the same. Daily chart is on around the 20 moving average. I would say if it breaks again above this 32.70 area, with RSI breaking 50 and MACD crossing bullish, then euro dollar should gain momentum all the way to the 200 moving average. If not, then we actually must look for a break below 130. Only look break below 130 to aim for lower. Until one of them happens, stay out. That's the best recommendation most likely I would have. Euro franc, after enjoying this speed move up, the prices just crashed all the way back. From my point of view, as long as the Central Bank of Swiss holds the 120, as closer it goes to 120, that should be considered as another buy opportunity. We can see that 120.50, 120.40 used to be a support. That's where buy opportunities should be considered. What about the yen pairs? Well, the yen has, as we discussed, stiff resistances around 84 and one little bit higher around 85, right? All this range. From my point of view, as you can see, weekly chart also aiming over both. From my point of view, during the next weeks, it will not take 1 week, probably not 2 weeks, unless something surprisingly happens. On the daily chart, we can see that we have a divergence. From my point of view, dollar yen has to build a divergence, so what it might do is a down move, short down move, then another up move to create here some regular divergence, something like that. Try to follow me, right? Something like that to create here a divergence and then to create a down move. But it will take time as long as we deal with the daily and the weekly chart. Unless something special happens, it should get time. It could take 2 weeks, 3 weeks, 4 weeks, or even more until we get the biggest move. As from the investors, they look for another cross below 82 to rejoin much longer down move for the dollar yen. see that weekly chart is extremely overbought already. We had a bullish divergence. We had resistance number 1, number 2, number 3. Right? Each higher high which will be reached right now should get a stronger down move. And I would say I would expect dollar yen to correct at least 300 pips, maybe 250, 300 pips approximately, at least, before deciding any new direction, any next direction. What about the yen pairs? Is it the time for them? Yeah, pound yen as well. Pound yen could go, and from my point of view it will be even better if it reached the 134, maybe a little bit higher. We have a classical divergence here, so the pound dollar also should, pound yen sorry, should also build a new divergence here and start the move. If we get a bearish candle right now, we have a regular divergence already, and if the stochastic cross down with a bearish candle, then that's the sell time. If not, any new high should be considered as a very beautiful, very strong joining for the pound yen. Same with the Canadian yen. Continuing divergence with a regular one could make a correction up again to create new beautiful regular divergence and then change the direction. But the yen pairs will take the time. Very interesting pair to follow also is the New Zealandian yen. Very nice divergence. Should play around, maybe a little bit higher, recreate its divergence and change the direction. As I said not once, this trend line will be retested again, but it could take time. And we see that this is a daily and weekly chart, so definitely it could take time. What about the indices? Nasdaq keeps playing around very highs, very extreme. Huge correction is about to happen. Question is when only. Weekly chart aiming extreme. Stochastic already overbought. We can see such a big candle on weekly chart after a bullish move. Normally means get ready for a big correction. The question is when exactly. From my point of view, it could go as long as for duplication max before making the down move, and I would expect the Nasdaq do the same as the New Zealandian dollar and go all the way for this trend line. Means within during the next period it should play around this area, complete its divergence and make the move. From my point of view, at least 200 points, but once again it will take time. It's not a question of it's not a thing of a week or two. It could take much longer, unless once again something unspecial, something unexpected happens on the markets. I would say this is the best opportunities to look for. About the gold, from my point of view, 1610 is very good area to look for a possible stop and a buy if it does go and reach it. And if it does break through, then the previous support around the 1550, 1540 could be very beautiful, strong area to look for huge retrace. Well, that's all for now. For the beginning of the week, of course, things might change, and we might see some new things develop, especially on the majors around the dollar. We should pay attention for the critical areas we have there. Breaking above or below the range we discussed should bring us the next move. Well, that's all, friends, for the beginning of the week. Of course, I will update you on the blog and on the live rooms with any new developments on the market, many new things. So just stay tuned and have a beautiful week, and thank you very much for watching this video. Yours, Vladimir.